Hello guys, section 192, restriction on non-cash transactions. So this is with regard to the director. So what is the restriction? You know what is the non-cash other than the cash. Cash or a bank or check is not involved. Asset for asset. There is one example for the non-cash. What is the restriction? In general meeting, resolution has to be passed in order to do the non-cash transaction. Give me one example for non-cash transaction. Example, Mr. Z suppose is a, let's say is a director of Turbo Limited. Mr. Z is the director of the Turbo Limited, and he acquires certain assets from the company for consideration other than the cash. This is the assets going. What he gives other than the cash, maybe furniture, something like that. So the company for consideration other than the cash by way of an agreement with the company. Maybe he will work for after 8 to 6, 6 to 8 he will work, whatever the other than the cash. But this is taken place without approval of shareholders in the general meeting. This time this section will come into play. What it says, no company shall enter any agreement, section 192. So no company this is all about the restrictions on non-cash transactions. So no company shall enter into agreement by which a director of the company, first one, director of the company or director of the holding company also possible, its holding or its subsidiary company or its associate company, so of that company or its holding, its subsidiary, its associate company, or a person connected with him, person connected with him, acquires or is to acquire assets for consideration. So you'll acquires the asset for consideration other than the consideration other than cash. So company cannot enter into such transaction unless prior approval from the director. That is one thing. Second point is, or the company acquires or is acquired to assets for consideration other than the cash from such director or a so concerned, unless prior approval for such arrangement is concerned is accorded. So company acquires. Now company acquires or is to acquire for consideration other than from the such director or a person so connected, unless prior approval for such arrangement is accorded by resolution of the company in general meeting. This is very important. Unless prior approval taken, so there should be a resolution in the general meeting. And if the director or a connected person is a director of its holding company, so if it is connected with the holding company, then of its holding company approval, this subsection shall also be required to be obtained by passing resolution in general meeting of the holding company. Resolution in holding company also required. So in the present case, what happened? They are taken without approval of shareholders. So the company has not taken the permission of the shareholder in the general meeting. They should have been taken the approval from the general meeting from the shareholders, but they are not taken in this case, so this transaction is invalid. What will be the consequences? Consequences, whatever it is, first of all, it is voidable at the option of the company. That is the one thing. That so contract, yes or no, company will tell you can deal with this transaction or no. That is the one thing. Another point is if any loss incurred because of this transaction, it should be indemnified. Company can take action against director. But there is an exception. If these transactions have happened in good faith without knowing the contravention, then contract is valid. MCQ question possible, but still for the loss, in case if there is any loss, director is responsible. So we will give one more example for better understanding. Example 2. Mr. A will see another auditor of Turbo Limited. Is a director. Director of the company. He's enters into an agreement with the Day Limited, a subsidiary. It is a subsidiary company. So he entered an agreement with a subsidiary of Turbo Limited to acquire certain machinery. by way of other than cash, of course. Consideration other than the cash. The transaction was approved by the shareholders, but this transaction is approved by the shareholder in the meeting, general meeting. Then what happens? If the transaction is valid, yes, Mr. A acquired machinery for consideration other than the cash from the subsidiary company of the Turbo after taking the approval of the shareholders. Correct? Then this is a absolutely valid transaction. Next example, last example, example 3. Mr. K is making an arrangement to acquire some stock in trade. Stock in trade from the BL Limited. BL Limited for the consideration of some furniture. We will give some furniture. But Mr. K is a director of the JS Limited. Is the director of the JS Limited. JS Limited is the subsidiary of the let's suppose say JS Limited is the holding company. This company is a holding company of the BL Limited. So he did transaction with the subsidiary company. Of course, in this case, what happens? What is the provision of the act says? Is there, if the contravention applies, is there a contravention? First of all, section 192 applicable. Number 1, prior approval of shareholder resolution in the general meeting is required. Correct? That is the first provision that has to be done. Then this is a holding company, is a director of the holding company. This will be taken care. Then again, in the holding company also resolution is required for this transaction. Shareholders in general meeting. So no company, that provision has to be entered. No company shall enter into an arrangement by which a director of the company or its holding subsidiary or assessed company or a person connected with him acquires or is to acquire assets for consideration other than cash from the company, or the company acquires or is to acquire assets for consideration other than the cash from such director or person so connected, unless prior approval for such arrangement is accorded by resolution of the company in general meeting, and if the director or connected person is a director of its holding company, approval shall also be required to be obtained by passing resolution in general meeting of the holding company. And one more point is notice. With regard to the notice for the resolution should be taken at general meeting, right? For that, notice has to be given to the shareholders. In the shareholders notice, it should mention the valuation of this transaction. by the registered valuer. Registered valuer of this arrangement. What is the transaction value? So the calculation done by the registered valuer. So this is with regard to the restriction on non-cash transaction involving directors. Non-cash transaction, section 192. Thank you.